Hello everyone, this is Crypto BitLaw, here with another blockchain legal brief, and today we're going to discuss how a sitting U.S. Senator recently proposed a series of sweeping regulations for stablecoins in the United States. But before we dive in, please, if you enjoy this content, hit that like button and subscribe to our channel. We'd appreciate that. With that said, let's jump on in and sort all this out. Alright, so here we can see CoinDesk reports top U.S. lawmaker proposes sweeping stablecoin regulation framework. The Stablecoin TRUST Act would give stablecoin issuers a variety of regulatory regimes to abide by, but enforce disclosure and redemption requirements. They say, a leading member of the Senate Banking Committee introduced a bill Wednesday to create a three-pronged regulatory framework for stablecoin issuers in the United States. Senator Patrick Toomey, a Republican from Pennsylvania, the ranking member of the committee, announced the, quote, Stablecoin Transparency of Reserves and Uniform Safe Transactions Act of 2022, dubbed the Stablecoin TRUST Act for short, as part of an effort to specify how the U.S.'s different regulatory agencies could approach companies issuing cryptocurrencies whose prices are pegged to the U.S. dollar or other assets. As written, the discussion draft of the bill would define a, quote, payment stablecoin, authorize the Office of the Comptroller of the Currency, or the OCC, to create a new license specific to stablecoin issuers, allow insured depository banks to issue payment stablecoins, and address state regulatory oversight of this segment of the crypto industry. Quote, payment stablecoins would include stablecoins issued by a centralized entity, are pegged to and can be converted to a fiat currency or currencies, are, quote, designed to be widely used as a medium of exchange, do not confer interest, and where transactions are recorded on a, quote, public distributed ledger. Stablecoin issuers would have to choose between securing the OCC license, a state money transmitter or similar license, or a traditional bank charter. These companies would be subject to a disclosure regime that would require them to secure regular attestations, detail redemption policies, and specify what actually backs the stablecoin they issue. OCC licensed insurers would also have access to the Federal Reserve's master account system, which would give them the ability to tap the broader financial system and larger amounts of liquidity in transacting. In remarks introducing the bill, Toomey said the bill would clarify that payment stablecoins are not securities. I think there's a growing awareness that this category is not going away, Toomey said. Lawmakers in the United States and around the world have closely scrutinized stablecoins since social media giant Facebook introduced the short-lived Libra, later dubbed Diem, project in 2019. The House of Representatives Financial Services Committee held a hearing earlier this year focused on the issue specifically, based on a President's Working Group on Financial Markets report addressing stablecoins from 2021. Last month, Senator Bill Hagerty, a Republican from Tennessee, and Representative Trey Hollingsworth, a Republican from Indiana, introduced a bill of their own, aimed at forcing stablecoin issuers to provide further transparency about the reserves backing their circulating tokens. On Wednesday, Toomey said he focused on his, quote, payment stablecoin term, as algorithmic stablecoins and seemingly decentralized stablecoins at large may behave differently from the cryptocurrencies his bill addresses. The discussion draft of a bill is meant to circulate and garner feedback rather than be immediately introduced as possible legislation. Toomey, whose term ends at the end of the year, has announced he will not seek re-election, meaning he has roughly 8 months to chart a path forward for the proposal if it is not passed by Congress by 2023. In a statement, Toomey noted that stablecoins are currently mainly used for cryptocurrency trades, but suggested they could be used in the broader economy in the future. Quote, they have potential, among other things, to speed up payments and automate transactions. The proposed regulatory framework I'm releasing today will allow this crypto innovation to continue flourishing while protecting consumers and minimizing potential risks from stablecoins to the financial system. I look forward to receiving feedback on this legislation from my colleagues and stakeholders as Congress continues its work on stablecoin regulation, he said. Okay, so now that we've seen what this bill is and what it's all about, I think that this is part of what is needed and required in the crypto and digital asset industry for it to further grow and for more institutional money to pour in. If there's one thing investors don't like, it's uncertainty. And what we have now is uncertainty regarding the framework of how regulation is ultimately going to unfold in this industry. And so I think that it's good that at least at this point we have two different bills that pertain directly to stablecoin. The Haggerty bill was discussed in this article, and also this Toomey bill. And both of them seek to provide further transparency to stablecoins. So it would force companies like Tether to actually divulge what is in their reserves backing their stablecoin. And I know that the Haggerty bill required stablecoin issuers to actually hold either U.S. treasuries or cash or approved instruments in order to back the reserves that serve as a foundation for the stablecoin and keep the peg. So ultimately, I think that this is a good thing. Where we knew regulation was coming. It was just a matter of when and how it was going to play out. And so I think that this is one of the necessary steps that the industry as a whole needs in order to get to that next step in the long journey of overall adoption and having more institutional money pour in, which is a prerequisite to number go up or keep going up for that matter. So all in all, interesting development. We'll keep you guys posted as this bill makes its way through Congress. And with that said, thanks again for watching. We'll see you all in the next video. And please, if you haven't already, like and subscribe. Take care.